Welcome to the C-Suite series, presented by ChannelCheck and Noble Capital Markets. Noble's an SEC registered, FINRA licensed broker-dealer and the source of the equity research available on ChannelCheck. Today's interview features Maple Gold Mines, OTC ticker symbol MGMLF, TSXV ticker symbol MGM. Noble Senior Research Analyst Mark Reichman interviews Maple Gold President and CEO Matthew Hornor. Visit channelcheck.com or click the link in the description to access equity research, news, and advanced market data on Maple Gold, all at no cost. And now, here's Mark and Matthew.
Hi, Matthew. It's great to see you.
Thanks, Mark. Thanks for having me.
Matthew, would you please share a little about your background and how you became affiliated with Maple Gold Mines?
Happy to. I trained as actually an international lawyer working in Japan in doing cross-border large financing deals before I joined one of the very well-known mining group called the Ivanhoe Group, which has projects around the world. And I worked for Robert Friedland, who runs that organization, for over 10 years. And I found this project after cutting my teeth in the mining space for a long time, after a fair amount of diligence, and I've been a part of this company for 5 years. I'm president, CEO, and director of this company.
How did the other members of your executive team and board complement your leadership?
Well, we handpicked the other board members based on the skill sets that they bring to the table. Maurice Tagami is a technical operations head for Wheaton Precious Metals, so he oversees the operations for their projects worldwide. Gerald Riverain is a iconic geologist that comes from Quebec, so he knows where all the projects are and all the good projects and how to look at our project from an exploration standpoint. There's Michelle Roth, who sits in New York, and so she's been in the capital markets, investor relations world for her entire career, starting many years ago. But specifically to the U.S. markets, she's very helpful in bringing us to the broader audience with the funds that she's connected to. And Sean Charlin has been in the capital markets in Vancouver and Canada for his whole career. So it's a complement of kind of the whole different required skill sets for kind of advancing interest of a junior mining company.
Well, for investors that may be unfamiliar, would you provide just a high-level sketch of the company's projects and properties?
Sure. We're sitting on a 400 square kilometer land package in the heart of the Abitibi Greenstone Belt, and the Abitibi Greenstone Belt is host to over 200 million ounces of gold production to date, and has the two largest gold mines in Canada, largest being Canadian Malartic, being run by our partner. So we have 400 square kilometers, kind of in the best zip code you'd want to find yourself if you were looking to look for gold in Canada and North America. One of the projects is a larger open pit style, large load, similar to Malartic. Average is about 3 million ounces at the moment and growing. The other is a past high grade producing project that was owned by Agnico Eagle that shut down in 1993 when gold prices were around $350 an ounce. Of course, today the gold price is many times higher than that. So we have a number of different assets within a joint venture with Agnico, and then one that we operate ourselves, sitting just next to the project I just mentioned. So there's 3 projects, 2 are a joint venture with our partners, Agnico Eagle.
I think our listeners would be interested in how your joint venture with Agnico Eagle was formed and a description of the working relationship.
Yeah, they're the 3rd largest gold producer on the planet. They recently formed a merger with Kirkland Lake, which brought them up to about $30 billion market cap Canadian, about 25 billion US, so quite large. We formed the relationship after a number of years of discussing the vision of our projects with them. They did an extensive amount of diligence on our projects. They came to site many times. We had many technical discussions. I looked at the core and the
prospectivity of our projects and actually turning them into a large-scale gold mining camp. So that's the origins of how the relationship came together, and we formulated the joint venture, the 50-50 joint venture, in a similar format to where they've put together also a 50-50 joint venture on the largest gold mine in Canada, and that project is called Canadian Malarctic, and they run that project with Yamana. So that's how it came about. Long time by them doing diligence on our projects and us always having an eye on the past producing high-grade gold project that they contributed to the joint venture.
Now, before we get into project specifics, what are your strategic goals for 2022? And then how is your drilling program split between each project?
This year we're going to be doing upwards of 30,000 meters of drilling across all of our projects. And so our objectives is to move all the projects forward in a meaningful manner. I like to say we take a kind of a dual-pronged approach to exploration and discovery. We have 3 million ounces already, as I said, that are increasing year on year, that sit in a relatively shallow geologic environment, around 350 meters. Just by way of example for the audience, most of the projects that have been producing in the Abitibi are very deep, comparatively speaking. And I'm speaking about 1.2 kilometers or 1,000 meters, 1,200 meters to 2,000 meters, which is the largest gold project there. So we have 3 million ounces that sit relatively shallow, and we're adding more ounces and forming the critical mass that you need to have prior to making the infrastructure development investment decision. And in addition to that, we're looking at quantum leap discovery exploration targeting, which is to find what I like to call the plumbing or the source rock that creates these ounces near surface. Because as we know, Mother Nature provides ounces for us at surface, starting deep below. So we're doing some very, very aggressive targeting a couple of thousand meters deep below the existing resource area. So it's a dual-pronged approach where we're adding to the near-surface structure of ounces that will get paid as we go down deeper, and also looking for the deeper structures to reveal to the market what ultimately this project really has. And that's on both the Douay and the Joutel side, where on that side we had an incredibly high-grade past producing project, and at depth they left a lot of incredibly high-grade targets that were left unexplored or undrilled. So we're going to go back and look at those and put holes down in through those structures. And I think that for right, and I believe it will be right, it's going to be a game-changing moment for us and our partners.
Well, let's start with Douay, which has an existing resource. Could you just talk a little bit about the different mineralization zones and perhaps the best opportunities to expand and upgrade the resource, and how you envision it developing over time?
Sure. Like there've been extensive drilling on the Douay West zone, which is kind of on the western flank of the resource area. There's a porphyry style section in the center, which has the lion's share of the inferred ounces. And then there's the 531 zone towards the eastern limb, if you will. I think back to what I said a second ago, the deeper holes are based on the geologic confidence we have of the higher grade mineralization at the bottom of the conceptual pits. So to increase the category of resource, it just requires to shorten or tighten the drill spacings. The categories of mineralization and resource estimation are based on how close the drill spacing is, right? So inferred is between 100 and 200 meters, and as you go more in a narrow fashion, you get higher confidence on the underground resource. So what we'll be doing is as we grow the confidence in the projects through discovery near surface, that includes narrowing some of the drill spacings to increase the categories. For example, we moved 21% of our inferred resource to measured indicated just in the last resource estimate update, by doing what I just said, and we expect to be doing more of the same going forward. So I think there's a number of different ways that we can actually both increase the confidence of the resource, but also expand the resource in around the existing resource area, and also, as I mentioned below.
And moving on to Joutel, I think some investors think of this as one project when in fact you have both Telbel and Eagle. So could you summarize each project and the drilling completed and then the plans for each of those?
It's great to have pictures to show kind of what this looked like back in time, but in 1974, this project came online. It was Agnico Eagle's first ever underground gold project. In fact, they named their company in part after the Eagle project. Now they're called Agnico Eagle. When they started that project, their average grade was 6.5 grams, which, as you know, Mark, by today's standards is quite high. Their cutoff grade was 6 grams, so they didn't look at anything that was below 6 grams. So the Joutel mine complex, as you mentioned correctly, hosts Eagle and Telbel. The Eagle project is where they started, near the surface, and then they drifted to the southeast. We've been drilling our 100% owned Eagle project, which is, as you mentioned, next to Telbel, and they're actually connected at depth below the surface, about 1,000 meters below the surface. We've drilled off maybe 8,000 meters at Eagle and counting, and some of those results are going to be coming out into the press in the coming days to show what we found initially from that effort. On the Telbel side, historically, as I mentioned, they continued to mine there. They over the history of that project, they mined over 1 million ounces, again at 6.5 grams. And on the Telbel side, we'll be looking at not only the near surface historical intercepts and chasing those, and we're talking 5.2, 3 gram, 9 gram rock, but also below where they mined out historically some incredibly high grade material. And as I mentioned a few minutes ago, left it untapped. And the reason why they stopped production back then was not for any other reason other than capital allocation requirements. They were a $20 million market cap company at the time. They're much smaller than they are today. And they found this project called LaRonde, which was turned into an incredible cash cow for them. And they made the decision not because they wanted to stop here necessarily, but they had a much bigger project at the time that made more sense for them, given what they were looking at. In mining, we like to say that the good projects always compete with the excellent projects. And at that time for them, LaRonde was a little bit better than this, and so they made the decision to put tools down. But as you'll see, they left a considerable amount of material behind, given what is now the current the gold price environment. 6 or 7 times higher than the gold price that they're working on at the time. So we have Eagle on one side that we're drilling. Telbel will be coming, and we'll be drilling that in the next coming weeks and months. And then all that information will be filtered out to the market as we get our assays back.
Now, with all 3 projects, it seems to have the potential to become a large gold district within the Abitibi Greenstone Belt. Are there any plans for Eagle to be included in the joint venture with Agnico?
I like to say on that subject that it'd be hard to imagine it not happening. Of course, anything's possible, but they used to be connected as one project, and of course, we have a wonderful working relationship with our partners at Agnico Eagle, and we'll do whatever is smart for the partnership, for the joint venture, and for the Maple Gold shareholders. And I would guess that down the road, it would just make pragmatic sense, logistical sense, as we build a mine and mill on top of surface, that they would be incorporated. But the commercial terms of that would obviously be smart for everybody involved, and of course the Maple Gold shareholders. Now the underground workings are all intact, and as the audience is probably aware, but is maybe not thinking of, to build underground workings takes many years. And if you're already starting from an existing underground infrastructure, your time savings is incredible. It's much easier to build in the air above ground buildings and mills than it is to build things in the dirt below the surface. I'm making a very simple but obvious point, but it's something that's important to remember. We can speed up the time to get back underway by many years, given the existing underground infrastructure that we enjoy. I mean, and also I can mention that in the Abitibi up there, as you mentioned, Mark, there have been many restart success stories. And so this would definitely not be the first, and it definitely will not be the last, assuming we're right and we get this back underway.
Would you address the company's share structure, balance sheet strength, and also just touch on how funding for each project is split between Agnico and Maple Gold?
Sure, there's a couple questions in there. I'll take them in order if I can remember them correctly. The capital structure, we're about an $80 million market cap Canadian company at the moment. We have $20 million in cash in the treasury, with another $14+ million being spent by our project partners. About 300 million shares or so out, and the funding by Agnico for the initial 4 years is a minimum of 4 million, 4 million, 5 million, 5 million, approximately over the first 4 years. And then if we go above that minimum spend, we split it 50-50 with our partners.
Now, the Abitibi Greenstone Belt has been an active area for M&A activity. Would you like to talk about some of the success stories and perhaps draw some comparisons to Maple Gold in terms of the upside potential?
Yeah, this is I can just point to a couple of different historical facts. I mean, since 2013, I think there's been 23 billion or so in M&A activity just in that region. So it is I would say kind of a hot spot for M&A consolidation for smart projects. The biggest of which happened just recently with our partner Agnico acquiring or merging with Kirkland Lake to create a $25 billion market cap company. So it is, for those reasons, I think quite interesting for anyone looking at our name and our story to maybe get involved and come along for the ride. The Lassonde curve is always something to keep in mind too when you're looking at junior mining stocks. The funnest part of the ride initially is getting into the exploration development phase, which is I think where we are, and then you get to the feasibility creation moment, and then you start building the mine or building the house. And then at that point, typically share prices and market caps and valuations tend to come back down, and then they build up slowly again. Mainly due to the simple fact of our own human experience. In any time we've renovated our own houses, we know it takes longer and costs more. No matter what you think initially, whether it be a kitchen or a bathroom or whatever it is, it invariably takes longer and costs more money. And the same is true with any construction project worldwide, and definitely also with mining. So the funnest part to get involved is kind of where we are right now. For people looking at and who believe that the gold price is going up, of course, which is what we all believe. They're temporary corrections up or down, but over the long term, I think with what's happening with inflation and the Fed and the currency creation that we've seen through the pandemic, I think all the setup is quite nice for anyone looking at the gold price, looking how to get maximum leverage, and we represent a pretty good option for them.
And what are some of the near-term milestones or catalysts that investors should be aware?
Well, I think I touched on one of them. It's the first set of results for phase 1 drilling of Eagle. Those will be coming out very shortly, and also the Douay side of the exploration initiative. We'll see results coming out, throughout the course of the year. So you'll see a lot of results from exploration happening, as well as potentially some M&A kind of ideas that we've been going down the road with a number of parties. Because in these moments of market corrections, you have a lot of companies out there that may represent pretty good targets for us if we can find some accretive transactions. So if those happens, it'll be, I think, a welcome news to the mining world, because there should be fewer names out there, and finding efficiencies in management and logistics and capital allocation is always a smart idea. So I think some of the milestones for us, for me personally, is to advance the projects, as I mentioned at the start of the call, in many different ways, starting with the results from Eagle and then leading into Douay. And then towards the end of the year, we'll see some of the deeper drilling results from some of this quantum leap style exploration that we're looking at.
Now, just to conclude, what are Maple Gold's key competitive advantages? What differentiates it from its peers, and why is now a good time to invest?
I love that question. Thank you. I think, the competitive advantages I think we have are maybe 4 or 5 that I can mention that I like to think that anyone is applying to any investment they make in the resource space, particularly in the junior mining space, but not restricted to junior mining. I mean, location is fundamentally important to any mining investment that you're considering. If you had 50 million ounces sitting under Geneva, you'll never build a mine because no one in that city are going to allow you to go forward. Now, if you have 50 million ounces in Quebec, it's a totally different story. So location is even more important than mining than it is in real estate, because you have to actually build sometimes an open pit, sometimes you have to build infrastructure, et cetera, et cetera. So we have an incredible competitive advantage given where we're sitting in, I think, the #1 mining jurisdiction on planet Earth being Quebec, and where we're sitting in the Abitibi. It's a very friendly jurisdiction. The government provides 37% back on all dollars we spend in exploration. So if we put $100 million in exploration, we get $37 million back. If we put $1 billion in, we get $370 million back from the government, or $10 million, $3.7 million back. That actually comes back into your treasury. That doesn't happen anywhere else in the world. I've operated in Mongolia and the DRC and other places, and they typically have their hand out for payment from the mining companies for operating in their countries. It's not the other way around. That's one huge competitive advantage we have. The other one, I would say, we have an existing resource, or not just saying trust us, there will be some ounces in the future. We are starting with one of the largest undeveloped resource packages in the Abitibi in Quebec, 3 million ounces and growing. So that's a competitive advantage. The other is, I'll mention the treasury we have, the capital we have on hand to execute. We're not looking to raise money anytime soon. So that's a de-risking factor that I think that is important and a competitive advantage for us. The other I would mention is the management team itself all hails from other very large scale mining companies that have done this before. We have probably 80 years or 90 years combined experience from leading large and small mining projects around the world. And so that's a huge de-risking or factor, competitive advantage. I think the last one would be, who else is invested in us? I would take comfort looking at our story, knowing that Fidelity and Agnico and the Caisse de depot, which is a $300 billion fund out of Quebec that always follows the good stories, and others, and without that kind of institutional backing, I think the vibe or the sentiment around our name would be a bit different. So we have, I think, a number of really key competitive factors that should allow those looking at our story to get a more comfortable faster with the proposition of making money and owning our shares. And the future, I think, looks really bright for us for all these reasons.
Matthew, thank you so much for joining us today.
Thank you, Mark. Thanks for having me. Pleasure speaking to you.
Thank you for joining us for this C-Suite interview presentation brought to you by Channel Check. View our YouTube channel for more video content, including C-Suite interviews, virtual roadshows, and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelcheck.com or click the link in the description to access equity research, news, and advanced market data on this and the 6,000 other small and micro-cap companies listed.